Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Tuesday the 13th of February. I'm Stephen Carroll.
And I'm Lizzie Burden. Coming up today, stronger than expected UK wage data leads traders to reduce Bank of England rate cut bets.
Chip designer ARM's stock rises by 29% in a single day and nearly doubles in less than a week.
Plus, pushing for a pause, the US president says he's actively working on a 6-week ceasefire between Israel and Hamas.
Let's start with a roundup of our top stories.
UK wage growth slowed less than expected in the fourth quarter, underscoring the case for the Bank of England to wait before cutting rates. Wages, excluding bonuses, rose by 6.2% from a year earlier, down from an upwardly revised 6.7% in the third quarter. Petra Tag, a director at Man Group UK, says the figures suggest the labour market's not cooling fast enough to satisfy worries of a wage price spiral.
What we have seen is a continuation of the trends over the past 12 months. Wage growth has remained quite sticky, which puts inevitable pressure on organisations to pay more to attract the right workers. On the surface, it's fairly flat, it's fairly calm, but it's what lies beneath for me is the important aspect of the data.
And indeed, Tag's analysis is reflected in the market reaction, with traders scaling back bets on cuts this year.
Well, Andrew Bailey says capital rules are not responsible for low UK bank valuations, but he remains puzzled as British lenders trade below their book values. The Bank of England governor was giving a speech in the East Midlands in England, saying that he believes that more reforms are needed to protect banks from runs like the one that broke Silicon Valley Bank UK last year. Bailey also dismissed UK recession concerns, saying that any slowdown will be shallow.
It's been just over 4 years since the UK officially left the European Union. Some economists say the country is still suffering the consequences. Bloomberg's Tiwa Adebayo has the details.
Brexit shrank the British economy. That's according to economists at Goldman Sachs, who say the UK has fallen significantly behind similar nations thanks to the decision. Their research found the country's real GDP has underperformed by about 5%. Reduced international trade and fewer migrants are included on a list of side effects that have contributed to the long-term cost of the move, according to the bank. Goldman's conclusion is broadly in line with other estimates about the drawbacks of Brexit. In London, Tiwa Adebayo, Bloomberg Radio.
Shares in ARM have risen again, extending a 3-day rally. The stock soared by 29%, closing at a record on Monday, with the chip designer almost doubling in value thanks to the artificial intelligence boom. Bloomberg's Carol Masser says the gains are being stoked by the firm's projections.
That was fueled by that revenue forecast that the company put out specifically that far exceeded the average of analyst estimates. So it's interesting. There wasn't anything specific today, but investors continuing that 3-day jump to more than 93% in ARM. So pretty remarkable.
Bloomberg's chief national correspondent Carol Masser there. The jump comes after a blockbuster earnings report which showed AI spending is boosting sales for ARM. Other big beneficiaries in the sector include Nvidia, whose sales tripled thanks to its AI accelerator chips.
Now to the geopolitics. Negotiators from Israel, the US, Egypt and Qatar are expected to resume talks in Cairo later to discuss a pause in fighting and the release of hostages being held by Hamas in Gaza. The discussions come as President Biden says he's pushing for a 6-week pause in the conflict.
The United States is working on a hostage deal between Israel and Hamas, which would bring an immediate and sustained period of calm to Gaza for at least 6 weeks, which we could then take the time to build something more enduring.
Biden's comments were his most detailed yet about the ongoing negotiations between Israel and Hamas, which the US is helping to facilitate. On Monday, Israeli forces launched strikes on the city of Rafah in the southern Gaza Strip, where more than 1 million people have sought shelter from the fighting. Many refugees fled the north of the territory after Israel launched its retaliatory campaign against Hamas for the group's October the 7th attack.
Elon Musk has told US Republican senators that, quote, there is no way in hell that Russian President Vladimir Putin could lose the war on Ukraine. The billionaire CEO of Tesla and SpaceX made the comment on X Spaces, part of his social media platform. Musk had expressed similar sentiments before, doubting Ukraine's ability to win the war and mocking Ukrainian President Vladimir Zelensky's requests for aid. His views contrast strongly with President Biden and Senate Republican leader Mitch McConnell, who argue that aiding Ukraine's defence against the Kremlin is in America's interest.
And finally, Citigroup's warning that the market needs to price in the risk of future Federal Reserve hikes. Strategists at the bank say traders should now be hedging the risk of a very brief easing cycle followed by rate increases. The analysis from the lender's economists come as Fed Governor Michelle Bowman said she doesn't see the need to cut at the moment.
I think it's too soon to have an expectation that or to measure or project when and how much I think we might be lowering the policy rate. I think the progress that we're making on inflation is very positive.
Bowman's comments come ahead of the today US inflation print out at 1:30 p.m. London time. That data is expected to show that price rises slowed to 2.9% year on year in January, and it'd be the first reading below 3% since March 2021. Well, in a moment, we're going to get more analysis on that UK jobs data. But first, we're going to have to talk about Taylor Swift again, because it seems that her presence at the Super Bowl boosted those viewing figures to hit a US TV record. 123 million is the number. Pretty stonking stuff.
Yeah, really interesting to see an increase in that as well. There's often conversations around the declining television audiences, particularly for big live events. But the fact that there's an increase, a 7% increase, and perhaps, attributable to the presence of Taylor Swift, perhaps to do with the streaming options that are being made available, because it was across CBS on live television, but also on Paramount Plus as well. I did try to look for a European counterpoint to this story, which obviously the first thing you would think of, Lizzie, is the Eurovision Song Contest, which is which is the biggest live audience event for television that's annual. That's actually on the way down, though, but that's partly because of Russia's exclusion from the contest and thus it not being broadcast in Russia. So 162 million people watched the Eurovision Song Contest final live and streamed last year. That had come down from about 183 million in 2021, but perhaps a trend that's interesting to compare in terms of television audience habits.
OK, they just need Taylor as a guest star. Well, let's get to some more serious numbers now. We've had the latest reading on the UK labour market this morning. Wage growth slowing less than expected in the last 3 months of the year, but the unemployment rate also falling unexpectedly. Our chief UK economist Dan Hansen joins us now for more. Dan, what's your read on this? You've got Torsten Bell at the Resolution Foundation saying the big picture is positive, but the market reading this hawkishly, paring back their bets on rate cuts in 2024. What's your take?
Well, yeah, I guess it depends which way you cut it. In terms of sort of living standards and the like, Torsten's absolutely right. We've got real wages rising here in the UK, but obviously from an inflation perspective, and I think the key thing here is inflation over the medium term, and the idea that it might settle at 2%, which is what the Bank of England really is aiming for here. I think the market reaction is probably about right, in that this was a sort of hawkish report, if you like. You had, as you mentioned there, faster than expected. You had a slowdown in wage growth, but it wasn't as significant as people as expected. And we've got this unemployment rate that's extremely low at 3.8%, but there are some lingering questions about the quality of the ONS data. If you look at broader survey measures, there are sort of stronger signs that the labour market is loosening. But I think all in all, I think for us at least, it's that wage growth number, the fact that wage growth isn't slowing quite as much as people expected. And the thing on the horizon now is that national living wage increase, which is the big thing that we're going to be watching with the wage figures, and whether that sort of derails this disinflationary process we've got in the wage figures at the moment.
Yeah, in April.
Because the markets have paired their bets on where they see the Bank of England cutting rates this year, down to kind of around 77 basis points the last time I looked this year, with the first cut looking most likely now in August. Do you see this reading having a material effect, or how do we put it together with what we're expecting in terms of the inflation numbers tomorrow?
Yeah, I think what's going to be really I think you've got to look slightly through I'm not saying this is noise, but there's going to be two bits of this over the first half of the year. You've got the first quarter where I think you will, particularly with the inflation figure tomorrow, we might get a bit of a setback there. We're expecting a slight rise, but I think the band of uncertainty around it is pretty big in terms of where that inflation number could land. But I think a lot of economists, including ourselves, are looking to that second quarter where we think inflation will really drop, and quite significantly. And now the question is whether the bank will put significant weight on that, or whether it's just going to continue to wait that little bit longer for the wage numbers to come off, and also core inflation to come down as well, because that's going to take longer to come down than the headline rate of inflation, because the drop in the headline rate is about energy prices. So I think there are question marks, but it's sort of a bit of holding your nerve here with the narrative, because I think it will change, and it will change going into the spring. And there will be a question marks, particularly as well. I know Bailey dismissed appeared to dismiss the points about recession yesterday, but if that narrative builds in the press, we've got an election probably this year, that's going to be really difficult for the bank. It's going to be a difficult one for them to navigate.
Yeah, and you mentioned the uncertainty in estimates around all this data. That, of course, is leading to volatility in the markets. But a huge factor in that, when it comes to the jobs data, is how unreliable it has been because of the flaws in the labour force survey. How much caution are you treating the data with? When is it likely to improve? And are there other private surveys that we should actually watch more closely?
Yeah, so to answer your question directly, a lot of caution. I find it quite difficult to believe the labour market tightened over the second half of last year, which is what the data currently shows, when the economy was maybe in a very mild technical recession, but definitely stagnating, flatlining. In terms of other indicators to look at, I mean, in terms of surveys, one thing we look at is the KPMG REC survey, quite a lot of detail, and that's something that the Bank of England places a lot of focus on, not only on the sort of quantity side of the labour market, so what's going on with unemployment, employment participation, but also in terms of wages, which shows, there's a promising picture there on the wages side as well. So it goes to the point that the bank has made in its minutes and in its guidance for quite a few months now, that it's looking at a broad range of data. And I think, just to answer your question directly, you should treat the official data, at least at the moment, with quite a bit of caution. It should begin to improve in the first half of this year, but the big point will be in September, when the new LFS survey comes out. But that's obviously an awful long time to wait to know exactly what's going on with the labour market. Okay.
Our chief UK economist, Dan Hansen, thank you very much.
OK, from the economics to the geopolitics, let's go to the Middle East now. The push by the United States for a prolonged pause in fighting in Gaza of at least 6 weeks to allow the release of more hostages. Our EMEA News Director Rosalind Matheson joins us for analysis. Ros, what else do we know about this plan?
Well, all we know about the plan as outlined by the US President Joe Biden last night is the timing that he would prefer for what he calls a pause in the fighting, and that's for 6 weeks. There's been lots of different plans floating around with different timeframes, anywhere from a couple of weeks to 4 or 5 months, depending on who's compiling it. But the elements of the plan are really the key beyond the timeframe, and that is the question of what's involved. Particularly, is it on an understanding that it leads to a permanent ceasefire in the fighting, and what happens to the Israeli troops in the meantime? Do they withdraw partially from the Gaza Strip, or do they need to withdraw fully from the Gaza Strip? And those seem to be really the sticking points in all of this. So regardless of whether it's sort of 6 weeks or 4 months, there are more fundamental problems in these negotiations towards a pause. But at least we do know that conversations about it at least are ongoing.
Yeah, indeed. We're following these reports of the meeting of CIA, Mossad, Egyptian and Qatari officials today. Are the fact that there are conversations being had like that an indication of progress towards an agreement? How should we read into them?
Well, there's been quite a few rounds of talks that have involved Egypt, Qatar, the US and Israel, and then obviously messages being passed on to Hamas back and forth through those third parties. So there's been quite a constant flurry of these meetings going on. And they've often involved the CIA and Mossad, particularly to share intel around the location of the Israeli hostages who are remaining in the Gaza Strip. We know there's quite a few of them, but their exact whereabouts are unclear. And so this is probably about the best detail about what, if there is a ceasefire, what an operation to get those hostages out, perhaps in exchange for Palestinian prisoners in Israeli jails, what that would look like logistically. So at least even when they're sort of arguing over the terms of the agreement, they're trying to understand the logistical challenges of it also.
So you've got the Arab nations trying to weigh on Hamas. Is Joe Biden actually having any cut through with Netanyahu by the looks of things?
Well, it doesn't appear so, or certainly at least publicly. And you can see the level of frustration within the US administration. There are all sorts of reports, unverified, of course, that Joe Biden is sort of talking quite angrily about the Israeli prime minister behind the scenes in private meetings with his own officials, expressing exasperation about it, which is essentially that the US is pressing Israel to slow down its war in the Gaza Strip. But the Israeli prime minister says, well, no, our goals are quite clear. We want to eradicate Hamas, and we haven't done that yet. And we haven't gotten the hostages out. So we're going to continue regardless. Particularly contentious is this idea of a full ground offensive, near in Rafah, near the border with Egypt.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Amazon, play Bloomberg 1130. I'm Lizzie Burden.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.